Okay, we are proceeding with where we ended last time, and today we are jumping straight forward to the real market chart where we are going to spot our market structure. So, as we can see, previously on recap, we saw that we had series of high highs and high lows on the bullish market structure, and likewise series of lower low and lower high on the bearish market structure. So on this chart, volatility 25 index, we are going to spot our market structure from the daily chart, and here we go. As you can see, we have a break of structure here, and there, break of structure, and another below the previous break of structure. Yeah, this way. So from here, we're going to find that the category of this price action is a bearish market structure, a downtrend. Why? Because we see we have our structure here. We have the structure created here, lower low and lower high, and here lower low, lower low there, and lower high here, lower high, and so on until there. Until here we have another break of structure, and this becomes lower high, which a drive to break this structure here, lower low, lower low. So simply at that. Now on making any analysis, one must consider the market structure on the higher time frame, but also order flow, and from there a trader or one can then move to the working time frame to execute trades based on the daily or high time frame order flow in the market structure. As you can see, why it is important to grasp this market structure. First of all, it helps to determine where the movement is, where the bias is. So on this price action, we are mainly going to focus on the selling opportunity. Why? Because sellers have more power than buyers. As you can see from here, sellers are pushing the price to the downside, and here pushing price to the downside, and here the sellers keeps on breaking the structure to the downside. And as you can see now, any pullback, okay, any pullback after a break of structure, we have pullbacks before the price proceeds going on to the market direction. So we take opportunities after the liquidity has been swept or after the end of the pullback, and from there we look for opportunity to sell, okay, targeting our structure here, our lower low there, okay, and so on. As you can see, when we shift to the lower time frame, 4 hour, okay, you can see how this was happening. Okay, you see, price break the structure here. Our latest current price action, price broke the structure to the downside. As you can see, the lower low was broken, and price went downwards, and then before proceeding, price made a pullback. Okay, so because this the price action on the daily is bearish or downtrend, so sellers took opportunities around here and not here, around here, where they take opportunity to move more downside. And remember, when you find price breaking the structure to the downside or upside, that means it's signaling that still there is a selling pressure. Yeah, so this is an example of a downtrend, and mind you, there are some situations whereby some of traders or the market can show buying opportunity in the downtrend. This I'm going to talk about in the next videos, but for the sake of this session, we are just focusing on knowing our structure. And there's another way of knowing if this is a valid pullback or not a valid pullback. Okay, also a valid pullback consists of more than 3 to 4 candles, 3 and above candles. As you can see here, this is a valid pullback. Why? Because we have more than 3 consecutive candles closing above the other candles, like this. You see, the first candle was closed above, the second candle closed above the first candle, the third candle closed above the second candle, and so on. So this is a valid pullback, but this one is not a valid pullback. You see, this one is not a valid pullback. Yes, even this one wasn't a valid pullback. So on this concept, you can see this, of course, it was a break of structure, but it wasn't a valid pullback. Okay, so this one also wasn't a valid pullback. Why? Because here wasn't a valid pullback. Why? Because we have got not more than 2 candles, okay, closing above one another, okay, in the downtrend. You see, we have only 2 candles, so this wasn't a pullback. That's why you see after the break of structure here, the price tend to move above this area to close this area. Why? Because this wasn't a pullback. This was just a liquidity to be swept. And as you can see, price moved there. Or you can see how many candles: 1, 2, 3, 4, 5 candles. So I don't know who came with this concept, but what I know is that when you find you have more than 3 candles consecutively closing either below one another in a bullish market, or closing above one another in a bearish market, that is a valid pullback or retracement. Likewise here, you see, we have 1, 2, 3, 4, 4 candles, and so on. So as you can see here, once the price has closed, as broke the structure to the downside, it tends to come back at this area. Why? Because there's something here. There's a liquidity here before then goes to the market direction. So guys, this was an example of a market structure on a bearish trend. Okay, one could tell me, okay, now how can we take advantage of this? Here it is. Okay, as we go lower, maybe to the 1 hour, because we have already spot our market structure on the high time frame, as you can see, price provided some